And hello, everyone. Welcome to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the Real Estate Guys, with you today. And thanks for joining us on KCMX as we continue our journey through 2019 in the Southern Oregon real estate market. That I just can't wait to see how this year rolls out, because 2018 turned out to be a pretty darn good year, right? I mean, it really was.
I've even had some busyness myself in this month of January and February, and been excited for that. I really am. Yeah.
You should be excited for that. Well, here next to me is Jim Remley, who's the managing principal broker at John L. Scott, and I call you kind of the guru of real estate stuff, because anyway, there's a lot. Great here to have you here, but there's a lot going on, isn't there?
It's an interesting market. It's a transitioning market, so there's lots of opportunity.
Lots of opportunities. And Shanon Pewtress is here as well. And Shanon has been on our show before, and you kind of team up with Jim on a lot of different things, don't you?
Sure, yeah. Well, there's a lot going on in real estate and a lot to be done. So.
Yeah, lot going on, I think, is probably the truism right there. You know that? Where it goes, we don't know. It was back in July. Remember, Joe, when I would talk about Jim's classes, our office meetings, our John L. Scott office meetings, we started talking about normalizing the market. Remember that? How we were starting to normalize in July, August, the smoke, the fall.
Yeah.
And didn't that turn out to be exactly what happened?
Yeah, exactly. The market went from what some people would call a frenzy market, where just a super low supply creates this sense in the market like the pond's drying up and we got to get to the last bit of water. And that's kind of what it was. I mean, every buyer was piling onto a very limited number of listings. So you had multiple offers, prices escalating quickly. But
what happens? I mean, all of a sudden things started to change.
I think, we've talked about this a lot in looking at the national numbers, and I think Shanon in the field would agree that affordability started to kick in, and so you can only go so high so long, right? Yeah. So with double-digit appreciation over multiple years, you hit a ceiling, and what happens is you have price resistance, and I'm sure Shanon saw that in the field.
I'm happy of where things are at right now. 4 years ago, everyone was rushing for multiple bid, and everybody was one of 7 offers on the table. And now people are making level-headed decisions. They're taking their time. They're negotiating. It's good.
Is that good? I mean, so you really want a balanced market? Is that really?
Yeah,
what,
it's always going to go between. It's going to flow from a buyer's market to a seller's market. I've been doing it 30 years. Yeah, and for some agents, they've never been in a buyer's market. It's been pretty much a seller's market the last 6-7 years. So there's going to be an interesting transition for a lot of agents and a lot of people in the market. For sellers that have never experienced it, maybe first-time home sellers. So it'll be an interesting learning curve for all of them. But a balanced market in real estate, so just so the audience understands, is about 6 months of inventory. And what that means is that if every realtor went on vacation, it would take about 6 months for the current supply of listings to sell off.
Right.
So just to give you an example, where we were a year ago in December, so last December, 2017. So go back a full cycle. It was 1.9 months of inventory at that point. This December, it was about 3.3 months of supply. So pretty dramatic increase. That's a 70% increase in inventory, but still way below the 6-month level. So by default, you'd still call us a seller's market.
Yeah. Now, we've been telling our audiences that within that of what you talk about, that there's another. You start digging deeper. Jim always is good about you got to dig deeper. There's more information you can glean. But within that, as you just talked about, that 3.5 months. There's a price differential within the market itself, so it's not even across. It's not even across all price ranges and neighborhoods and things like that, right? Is that right?
Yeah, Shanon, you seen that?
Well, the average price here we're seeing for 2018 was $280,000. $280,000, and so to be considered a luxury home is double that of your average median price. So for Jackson County, that would be about $560,000 would be considered a luxury home. So once people enter into that bracket, we tend to see a surplus, an oversupply of some of our luxury homes.
I mean, there was not a lot of luxury homes in the John L. Scott world is what, $900,000 and above? Isn't that what they?
Yeah,
consider that
we
to
have
be?
a program called Exceptional Homes, and the Exceptional Homes bracket for us is 900,000 and over.
Okay.
Locally, it would be more along lines with what Shannon's talking about.
Around
580 would be
yeah.
kind of your starter luxury in
Okay.
most cases. Interesting, Pete. You answered the right question a couple of meetings ago. I asked the question: how many homes do you think are on the market over 900,000 as of today? And Pete somehow miraculously pulled out of 100 agents. He raised his hand and said 105, and that was the right answer.
Yeah.
And so
'cause we do all that digging.
Yeah, we do the
here.
digging, right? So 105 listings, just to put that in perspective, over 900,000. And what that translates into when we talk about that months of supply number is that's 21 months of supply.
Yeah.
Wow.
So what happened to the luxury market? Because we followed it on our show. I mean, we saw there wasn't much happening. There are some rural areas. I mean, you still see some rural properties sell, but what happened to that market? Because it was so buoyant or something for a while.
Well, there's still buyers in the market. It's just a much smaller buyer pool.
Okay.
And what you've had is a rapid expansion of the number of listings that have come on the market. So it's all supply and demand. There's just a lot more supply than there's been in the past. The number of sales has actually increased in that market. It's just there's way more to choose from.
There's just more to choose from.
Right.
Yeah. Okay.
Historically, though, we have seen our neighbors from the south and from elsewhere now coming to Oregon that have snapped up those properties and been able to transact those properties. It's just a matter of time, I think. That movement's maybe not there, or that new inventory is just getting the word out that there's some nice options to choose from up there.
Right.
Yeah,
So
I agree.
We're about 6 months behind the California market,
Yes, yeah.
and about a third of the people that I work with are from California or out
Really?
of the state.
Okay.
Yep.
And for California, in that area, for $500,000, you'll maybe get a 2-bedroom condo garage.
Yeah, on the edge. Yeah.
So people come here thinking that they might want to spend $1 million or something like that in our luxury market, but they'll find in Oregon they can find something great for $600,000, $700,000, well below their range. And we've seen a lot of new construction go up in the East Medford area too, in that price range.
Yeah.
So it's been competing with the rural markets of Rogue River and Jacksonville areas.
Right.
We've been arguing about what's being built, where it's not necessarily where it's being built, but what's being built for the demand in our community. And there's so much more than just 3-2 luxury homes that are needed like around here.
Yeah.
And boy, we just struggle with that in our valley in terms of prices and rentals and the whole thing, isn't it? It's just affordability. You keep coming back. Jim comes back to affordability, and that really is really the key for sure.
And we've seen a stretch in this early going into this year where we've seen more price reductions than new listings.
Absolutely.
Because there are a lot of sellers that were really high on the hog, so to speak, and are having to come back to reality. And again, as you mentioned, the buyers are more discerning, and they are not going beyond their means for a property that's not worth that price.
Absolutely. The interesting thing is Shannon pointed out the average price $280 for
A home.
all homes.
All homes.
But when you look at new construction, which is what you're talking about,
Right.
affordability homes, is there an affordability market? And the average is $343 last year.
Yeah,
So it's significantly more to buy a new home on average. There's just not a lot of starter homes being built. I mean, most of them are customs.
I can't wait to ask this to both of you, Shannon and to Jim, because we're into this. The governments have changed their attitudes toward allowing additional dwelling units on their properties because of this shortage. Small places, tiny homes. We've talked about. Do you see any market in those at all around here? Do you see anybody talking about that kind of thing? It reminds me of green building, green stuff. Everybody talks about it, but nobody actually does it. What about that? Do you see that coming? ADUs, more of that, anything, or not?
Shannon.
I have a whole opinion about this.
Good.
Because you're on the housing.
Well, I was on the Housing Commission for a
Commission.
couple years.
That's
and
right.
so we worked very closely with the City Council,
Right,
Medford City
right.
Council. And so we met quite often with local members from nonprofit organizations that would come to us and propose what their plans were to address this issue of affordable housing. Not low-income housing, affordable housing.
Right.
And so from homeless shelters to addiction recovery centers, so we saw the needs of the community. So we've talked about from extending the urban growth boundary, the tiny house village. That was a really tough thing
Those
to
are
get
tough
over
issues, yeah.
a few years ago. And now we've embraced the tiny house village concept.
Yeah.
We're seeing it more and more. We're realizing we need cottage style, single level smaller homes. People are trying to simplify their lives, trying less is more. 1,200 square feet will do it for you these days.
Well, I'm the oldest one in the room here, and I can just tell you, when you're retiring or getting ready to retire, and there's tons and tons of boomers my age and older, where do they go? Let me tell you, that is the biggest issue that I see around here is where are we putting all the people who've been here 20, 30, older people like myself, is where do you go? There's only so many manufactured homes. There's so many apartments. There's so many affordability issues.
We're too far from the ice flows.
Where do you go? Put you on the ice floe and send you out.
See you later.
Yeah, that's what you're probably. Yeah. Anyway, those are still big issues out there in housing that are just kind of dominate things, I think.
Absolutely. I think, the concept of aging in place, I just had a meeting with one of our builders, and we had this whole conversation about the concept of aging in place. And they're building cottages specifically designed so people have wider hallways, handles in the bathrooms, a one level, no step entry, all those kinds of things that are kind of forward thinking. So you buy it in your 50s or 60s, but you can stay there till you're 80 or 90 or longer, So that's kind of the concept. And I think a lot of smart builders are starting to think about that.
Yeah, I hope so. Shanon hopes so. And we talked about this when you were several years ago when you were on the show, the same kind of issues. And Tiny Village has done well. We did a show with them, and the city council certainly... Medford City Council has certainly signed on to that, haven't they, though?
Supported the expansion as well.
Surprised everybody as well. So, we'll see there. So we got a break coming up here in a couple minutes. But we're going to talk in the next segment about what you think is going to happen, okay? Gotcha. What people should be ready for, buyers and sellers.
My crystal ball.
Crystal ball.
I actually have a magic 8 ball.
Oh, perfect. Shake it.
Whatever works. Whatever will tell us.
Because really we want people to be prepared. Right?
Yes, for sure.
And it's a different market for buyers and sellers. We've been here for 10 years. We started off, when we started our show 10 years ago, we had mostly distressed property sales.
Down to 2%. I just got the new study.
I was going to say 2% today.
Wow. Yep. 98% of sales are what we now call happy sales. Well, we used to call happy sales in the downturn. Right?
Yeah.
So interesting times.
You don't even hear the term short sale anymore, do you?
Yeah.
That's how much and how far it's changed.
Absolutely.
But it's different for buyers and sellers right now. Right now, we've been talking, it's been a buyer's market. Mm-hmm. We've been saying that for a long time, right? And that's not, but even if it is in some areas, you got to be ready for what's coming because we're going to see more inventory. All that is coming up ahead, and so we want to get your opinions on that as we go through this because I think it's going to be a pretty wild spring. You do? You think so too?
It's going to be busy.
I'm planning now.
And if 40%, think of this way, if 40% of the sales are from out of state, think of all the new people who moved into our valley over the last few years.
Absolutely.
Because we sell
good example of that.
Homes.
We had 245 sales in January this year compared to 203 the year before in 2018.
At John L. Scott.
At John L. Scott. So, we're saying that's a massive surge. That's 20% plus increase in sales. So we're planning for a big 2019.
It's going to look, that's what I'm thinking too, because all the alignment points to that happening.
We're trying to clear that lingering inventory before the new stuff comes on board. Because once the new stuff comes on board, if you're lingering, you're going to be in the slow lane.
Absolutely.
And the best part, it's not going to be a crazy time like it was. It's going to be slow and methodical, which is really better to go.
Normal market.
Normal market is what we're heading for. Okay, we're with Jim Remley and Shanon Pewtress from John L. Scott today. We've got a John L. Scott Market Watch show for you. We got a break coming up here. Don't forget you can check out any of our past shows at realestateshowOregon.com, and we're coming right back to KCMX after this. And welcome back to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brent, the real estate guys, with you today, and thanks for joining us. I have a terrific show going here talking about this real estate market with Jim Remley, who's a managing principal broker at John L. Scott and a real estate coach.
Yes.
Extraordinaire.
Yes, I like that.
You talk about herding cats. You heard that term, He herds 3 offices now, Medford, Ashland, and Eugene. How many agents?
We have 160 here in Medford and Ashland.
Could you imagine trying to work with that many people?
It's actually very advantageous
I don't know
when
how
you're trying to put deals together and find buyers and sellers.
That's right.
I don't know how you do it. Anyway, and Shanon Pewtress from John L. Scott is here as well. And Shanon was a former member of the Medford Housing Commission, but you're not on it anymore.
No. It was a great opportunity, though. I learned a lot about the community and the needs housing and how much housing impacts.
And
everyone.
you served your time in doing that as well. So anyway, we're talking about the real estate market here and what's going on as we head into February, more March, of course, getting into the spring season. So what's going to happen? So we always go to Jim because he kind of knows all this stuff of, what do you think? I mean, what should people prepare for? Because I know a lot of people thinking about selling. I mean, I know, and moving and changing their life. I mean, let's say life changes, and we all know that. So tell us what you think.
From an overall market perspective, the market reality is we're probably going to have higher interest rates as we move through 2019. We were expecting them to rise a lot faster, but they've moderated that now, and that's actually a really, really good positive for the market.
It has been, yeah.
So that has released a lot of tension in the market where people were kind of afraid, and now people are moving forward. That's why we had a surge in sales, as I mentioned before the break, 245 sales in January for us. But from a seller's perspective, some sellers at this time of year were just coming in to. It was snowing yesterday. It was snowing this morning. People are saying, "Should I list my house now?"
Yeah.
Or wait till spring and summer? And my answer to that is, you absolutely, if you have any thought of selling, now is the time to list it. And the reason is there's a tremendous, we're predicting a tremendous surge in inventory coming in spring and summer, more than typically.
Really?
Because there's been a lot of pent-up seller demand.
So you think there's still been pent-up seller demand?
There's no question. There's no question.
Okay.
Yeah.
Okay.
And the reason for that is if you study the numbers, you'll find that the average homeowner in America has been in their house about 12 years now. You compare that for 30 years of my career, and NAR's been studying this for about the same time. The average was 6 years.
Right.
So that means if somebody is not liking their house, they're 6 years overdue for a move. You think about that.
Okay.
And that is where you saw a lack of supply. A lot of it was caused by people being underwater in their house. They couldn't sell.
Right.
They lost their jobs. They couldn't qualify to buy for the next house. That's all being released. And so you're going to see a lot of sellers come to market. And the biggest thing for sellers right now is they're smart. Sellers overall, the market's smart. They understand that they're a high point for pricing. Okay. So they're going to want to go after that price. So if you're sitting on the market waiting for the prices to continue going at a double digit, those days are over.
Right. They're not
coming back. We're going to go back to,
because that's not sustainable.
Yeah, that's not good. We're going back to single digit and probably low single digit appreciation. So you can let go of the 12, 15% appreciation that's gone. Yeah. So sell, and the reason why I'd say sell now for two reasons. Number one, a lot of supply coming on, and when you have more supply, that's more competition, harder for you to sell. Second biggest reason is lock in the low interest rates because they will rise. They're not going to quite rise maybe as fast as we thought they were, but they're going to rise. And you got to think, when you sell, you become a buyer. Right. And when you become a buyer, you're going to be paying that new mortgage for 30 years. So that's the reason to put the home on the market now.
Okay. Tell me about what the condition of the home should be, because Jim says put it on the market now if you're ready to do that. They have to be move-in ready. I mean, tell me what you're thinking there to get the prices that people want. That's certainly what my buyers are certainly saying. They want it. They don't want to have to fix things up. They want it ready to go for the price that you're asking me to get. Is that what you see, or tell me what?
There's a lot of things that go into making sure that your house will sell for the right price and the right time.
Yeah.
And so right now, a lot of people, we're starting those conversations. Right now, we're talking about what we need to do for your customized home to get it ready on day one. And we put together a customized marketing plan for each property, and that will include a list sometimes of repairs that they need to make, or maybe you need to take down your photos from 1980 off your wall, depersonalize your home. Obviously, make sure the welcome mat is there and the front door looks good. It's a place that buyers spend the most time, surprisingly. Little things like that. But there's, of course, a list of things that people need to do to prepare their home, from cleaning it from the inside out, making sure that the exterior is good. Of course, you need the curb appeal. But a lot of times, these sellers, like Jim said, they've been watching for a while and have already spent a lot of time looking online, since 94% of buyers look online anyway. They're already seeing what homes look like, and so have expectations of what they probably need to do for their home as well. And so it's a bigger conversation than just what do we need to do to sell your home. It's also, where do you want to go? What are your needs and wants? And can we find that home for you too? Because you now become a part of a domino.
Yeah, we've been doing pre-home inspections lately.
Yeah.
And I did it on my house when I sold it, but also now telling other people to do this as we go along. We're finding all sorts of things, especially on older homes, not necessarily on a new home, but older homes, because the buyer's going to find this stuff, right? I mean, you can't
They're gonna do
really
an
mask
inspection.
it, right?
Yeah, they're going to do an inspection. For
So
sure.
getting it ready and you're right, it's got to be clean, it's got to be nice, you got it as best you can, because buyers are going to walk away, or are they going to say they're not interested in it, right? It's just the way it is, even in this market.
Yep.
Right. People know what they want, and I think that they are a little more picky these days too. They don't want to take off the wallpaper. They don't want to do these certain things. We're not in the days of flipping houses anymore, unless you're in that $200,000 price range and are a cash investor or something like that.
What's happening in the lower range, you think? Because that's where still a lot of activity there, where most people can afford, is in under the 500,000 range, or even 300,000 range, wherever.
The good news is more listings are coming online in that price range. As more supply comes to the market, we are seeing more supply in all market bands.
So you're seeing it in all price ranges,
price points.
not just in
Not just
here,
the high
down
point.
here. Okay.
But it is a tale of two markets. Above, as you mentioned, 500,000. It is a buyer's market. Above 500,000 is a buyer market. Below 500,000 is a seller's market at the moment. And so one thing for everyone to realize is that we just got a new study out, more numbers, is that the average buyer spends 10 weeks looking for a house.
Okay, 10 weeks.
And drum roll, how many homes they look at?
7.
10. Shannon
I was going to
knows.
say 7. Oh, Shannon knew that.
Shannon had it. So when you are a seller, you got to imagine that you're competing with 10 other properties or 9 other properties. And so that buyer's going to measure you against the other 9, and you got to say to yourself, how do I stack up? And sometimes in terms of getting people ready for sale is to take them out and show them the other 9. Let's look at them. Right? Let's check them out. Joe's probably done that.
Well, you've been looking for stuff. I mean, haven't you? I mean, we've all been looking
I've
for.
gone past 10 weeks with some folks.
Have you?
Yeah.
Wow.
You have.
But looking for 4 bedrooms in a school district that have some certain parameters that limit our options. So we're looking for that fresh inventory.
You know what's cool about that
anxious.
is we've just rolled out on our website the ability to search by school district.
By school district.
It's pretty cool.
Yeah. See, there's all sorts of opportunities.
The tools, honestly, the tools and our buyers are so much more informed and aware.
Sophisticated.
We don't have to go labor. We look, and we're always looking for leads for them, but most of the time they've got it to me before I even had a chance to see it that day or see it come up.
Sellers need to realize buyers are pretty sophisticated.
They are.
They are.
Don't you think?
Yeah.
They've seen it. They've seen what's on the market.
Last year, we started to see sellers get the dose of reality that they needed with the overpricing. As we started to see a lot more appraisals come back, and buyers, they're not going to pay more than the appraised price. We're back to the negotiation table, and so we also saw last summer was 94% of asking price that buyers were paying on average, and it's usually about 97-98%. So they were negotiating a little harder anyway.
So it made it easier to negotiate when you're coming down, right? I mean, when that lower range, because at one time I think you're right, it was almost like 97% sellers were getting, but that's really dropped.
The best thing that we can do for our buyers right now is to help educate them and to get them set up with their lender, to get through the pre-qualification process, so that when they do find the one, that they can jump forward with a very strong offer and beat everybody out if needed.
What's interesting about today's buyer versus a buyer like 5 years ago, 10 years ago, is that almost every buyer is connected to a portal, and a portal like John L. Scott or Realtor.com or Zillow or whatever. And so what happens is, as a new listing hits the market, it's pretty much instantly emailed out to every buyer that's looking in that price range.
Right.
And so the whole market pretty much turns in unison and looks within 24 hours, really, at this new listing. And they all kind of collectively decide, is this thing overpriced or not? And it's overpriced. Guess what? You hear crickets.
You're not going to get any showings.
You're not going to
right?
get any showings.
Okay.
If it's priced right, you're going to get the surge of activity. That's why most houses that do sell in the first 3 to 4 weeks. The ones that don't sell in the first 3 to 4 weeks, you got to really look hard at pricing.
But we've also seen the days in the market increase, right? In the last few months, it has gone up because more inventory. There's more
inventory. More to
choice.
choose from.
More to choose from.
Pretty soon someone's going to develop an app like Tinder for homes.
Swipe left,
swipe right.
That's a great idea.
Yeah, it really is.
Wow, write
You
that
should
down.
take that route.
I like it. I don't like it.
I like it. Don't like it.
That would be interesting. All the
More fun
the
than
homes
just
in
saying
the area.
cart.
Yeah.
More modern, it feels like.
One thing that we've developed along those lines is an instant text notification, which allows our buyers to get a text instead of an email. You can put them a few hours ahead of the competition, which makes a difference in a tight market. And we start still, for the homes that are price rated, it's still a tight market.
They're still out there, and they're still selling fast.
Absolutely,
because you can see that everywhere. So, I'm
price point.
price point.
Everything comes down in the end to price.
Absolutely.
Doesn't it?
No question.
Every time everything always comes down to what you're going to do in price. What about appraisals as the market normalizes? Again, you tell buyers and sellers it's got to appraise here. Are we going to see appraisers now change, or are we going to go through a period of that? Do you think, or not?
I think this is actually an easier time for appraisal, and Shannon's in the field selling homes every day.
Yeah, I think last year, as I mentioned earlier, they were coming back and seeing different appraisals come in, and I think it was good. It was keeping the integrity of the system. A few years ago we saw the TRID laws come through, and it was taking us from a 30-day closing to a 45-day closing because they added more laws. And so, if anything, we're doing great things for our buyers. We're educating them. And with the appraisals that are going to come through, we really just need to focus on the safety and structural issues of a home, just to make sure that there's no mold and mice and leaky ceiling or something like that. But aesthetics and things like that, it's not like it was before.
We got a break coming up here in a couple of minutes. Rural properties really took a whacking to me in 2018. They didn't rise as much. There wasn't as many sales were less than they were a year ago. They were probably the hardest hit in 2018. Wouldn't you say?
Yeah, the green rush is over.
Yeah, exactly.
So it's a simple answer to that one.
Yeah, but what happens to those properties?
And the market,
the people who own properties who want to sell them now.
The market for the product has plummeted.
Yeah, that's what's causing it.
That's what's driving people off of those properties. They're not feasible and not financially feasible to stay there and operate.
You're going to look at a massive market reset in that market.
And they overpaid.
Yeah, they
grossly overpaid.
Overpaid, and prices got driven up, and now prices are going to fall.
Right.
Well, it's hard on people who have lived in rural areas who market right now because they're feeling the effects of it.
Yeah,
and they're not
really
cannabis
got a
growers.
vineyard.
Well,
Or get
more
into
stable
hemp.
Hemp is the answer.
Hemp is the way forward. Yeah.
Yeah, there's cannabis grow sites out there you can really get cheap right now, but nobody wants them, and the values of those places are just going to plummet. And there's a bunch of them out there, surprisingly so, that were once going to turn $1 million cannabis farms into zero, and it's just a shame of what's happened out there in a lot of those rural properties.
Just go up and smoke.
Yeah. All right. We got a break coming up here. We're with Jim Remley and Shanon Pewtress today on the Real Estate Show and a John L. Scott Market Watch. We'll take a break, coming right back. Our final segment right after this. And welcome back to the Real Estate Show here on KCMX News Media 880. Next week here on the show, coming up, the Rogue Valley Association of Realtors is one of our sponsors, and they've got their big Food and Wine Classic, coming up on March 21st. And so we're going to talk about that next week with Tina Grimes, who will be here. And Arvars, we're going through a whole bunch of changes down there, by the way. Did you know that? They're like they're building new, remodeling. And
You lost me at food and wine. We were going to talk about food and wine. I'm in. I'll be here.
He's done.
Well, this is the first year we will actually be here because we usually travel. We be to the tournaments. And so anyway, that's coming up on March 21st. That'll be next week. Today on the show, Jim Remley, who's the managing principal broker at John L. Scott, is here. And Shanon Pewtress, a broker also with John L. Scott. And these two have teamed up on a lot of different projects, haven't you? I think it's really cool that you both have a great passion for something exciting and new in real estate, right? Isn't that true?
Shannon's super talented. She's helped me with a lot with training programs that we've done, and so it's great to work together.
And you're doing the coaching. I know a lot of real estate coaching for people.
Yep.
And let me tell you, if you're interested in that, this is the person you want to go to. And seriously, I mean, I absolutely. It's great to work with you and enjoy listening to you at meetings.
Thank you.
And appreciate also sponsorship of the show, and the agents that have come on have represented John L. Scott fantastically, and have just brought some knowledge and some insights that you can't get. A local show can't get any better than from getting frontline information from our folks. And it's really great contribution.
Yes.
The Toners were on
a
few weeks ago, and they were sharing us about staging. What they've been doing, trying to expand their worlds and all. Anyway, it's fascinating.
And her husband, and I drive by their new development on Aspen Street every day.
Oh, yeah,
and I see new frames going up.
Oh, they're killing it with that.
And their lots are pending before they could even get them scraped.
Beautiful homes
they're doing really well. They're great development.
Highly motivated, highly successful people.
Yeah.
Anyway, we have a lot. Talk about old people. Let's talk about millennials for just a second and renters.
Yeah.
Now is the time. I mean, we always talk about do you rent or buy?
Right.
We all have been through that in our life, and it turns out buying makes the most sense. And you've got some things you want to share there too.
Yeah, I think what's interesting is the millennial generation is going to surpass boomers in the next year in terms of size. To size, yeah, about 74 million.
You know what that means, don't you?
Yeah, that means
we're disappearing.
Watch out! I'm a Gen Xer, so they're bigger than me.
Flow.
Yeah, watch out.
I see the ice flow.
So it's interesting when you look at them as a buyer group. Our numbers we just got from NAR show that 32% of the buyers in the marketplace are first-time home buyers, and the vast majority,
32%
of buyers are first-time home buyers, and most of those people are going to be millennials. Millennials have taken longer to buy a home than any other previous generation. Reason for that is that they've had a hard time during the Great Recession getting jobs. I mean, they got out of college, and then they had a hard time finding a job.
Or saving money.
Student debt. Student debt's a huge drag. But now they're coming through that. Jobs, there was a new jobs report in January. 304,000 jobs were added to the economy. And that blew past expectations of 170,000 jobs added to the economy.
Wow.
A lot of those folks are millennials getting jobs. So that's going to, we talk about what's going to happen in 2019. We're still going to see, I think,
well, it's one of those. Yeah,
he's fired. Fire that guy. Wanna keep going?
Yeah, absolutely.
Okay.
Yeah.
So you're going to see a ton of millennials coming to market. But what's interesting is Shannon's in the field talking to these kids a lot, and what we have to do a lot of times is change their perception that they can be a buyer, because a lot of them don't understand the statistics, right, Shannon?
Well, a lot of it too is that they are tired of giving money to their landlord. I looked at a rental agreement today, and the gentleman was paying $1,600 a month for a 2-bedroom, 1 bath in Eagle Point. And he could buy a $270,000 house in East Medford and pay the exact same amount. And I think, again, if we educate our buyers and get them set up with the right lender to talk about the loan programs, they'll see that they have options. That there are first-time home buyer programs. There's 0%, 3%, 5% down payment options.
And don't millennials or something believe that it takes 20% down payment?
Yeah, that's what's interesting. 49% of renters believe it takes 20% or more to buy a home. Now, in our market, where your average price is $280,000, that's $56,000. Yeah. And there's hardly anybody I know that has $56,000 laying around, let alone a renter, right?
Yeah.
And so when you think about that, it's a big it's a misconception.
Huge misconception.
The actual number for 2018 was the median down payment of all homes sold last year was 5% across the country.
5%.
So that's a 5% down. So back to the $280,000 house, it's about $10,000. That's more manageable for most people. And what a lot of people don't realize is that when we're negotiating deals, Shannon's negotiating deals, you can have the seller contribute sometimes towards that. You can have, if they're a veteran, they can get a 0 down loan sometimes. They can get closing costs sometimes help from the sellers. There's a lot of creative things to do to help buyers get into homes.
And the most important thing is just having these critical conversations with your realtor, with your lender, with your family, your support group, and putting a plan together and taking action and planning out those 10 weeks if needed to look at the 10 houses and get out there and just go for it.
Well, if you don't, you have to. Go ahead.
Yeah, so the interesting thing about millennials, though, there was a little bit of a fear within the market, within the realtor market and the realtor organization, that millennials would not value home ownership.
Right.
Because they saw their parents get burned by the Great Recession. There was a great fear about that, but that hasn't come true. And the good news is, in a recent study done by Bank of America, they found that right behind retiring, buying a home was the most important thing in terms of their goal set, right? And actually, it came in front of getting married. So they'd rather buy a home than get married. Came in front of having children, and came in front of traveling the world. So they'd rather, second to retiring, they'd rather buy a home than do all those things, which is amazing.
Smart.
Well, you'd be smart too,
because it'll help them do all those other things.
What is the average? The reason you do that is because it generates wealth. It creates wealth for you, because the average renter in this country has a wealth of what?
About $5,000.
And the average homeowner in this country has a wealth of what?
It's well in excess of $200,000.
See, we've been saying that. So, I mean, that makes so much more sense. We're going to be out of time. Tell me about now seller concessions. As we go into this market here, the kind of final thing for you, what should people expect about having to give or not give in seller concessions? What's the kind of the rule that they're used?
So another study just came out. 22% of sellers are doing some level of seller concession.
22% of sellers are giving some sort of concession
to the buyer at closing, and I can tell you what those things are. 10% are giving closing costs, just like we were talking about.
Closing costs. We always get that. Okay.
Yep. 9% are providing what we call home warranty after closing, right?
I do that more, yeah.
And 3% are doing some level of remodeling for the buyer to help them get into the house.
Okay.
And then, there's a million other ways that can be spent, but that's the most common ways that those dollars are being invested.
Okay. Yeah.
And we really should be prepping our sellers too to have that expectation that, hey,
as the market changes.
Yes.
As the market changes, don't be surprised to see offers coming in at X amount with buyer asking for X amount of closing costs. And a lot of buyers aren't aware that there's closing costs that even exist. They're stuck on the down payment, but those closing costs can be sometimes $5,000-$6,000 in addition.
And a lot, and sometimes they can make deals and go sideways over closing costs. Everybody's experienced that. So you're right. It's a knowledgeable thing, a normalizing market, a changing market, but pretty dynamic and pretty exciting next few months ahead, right? I mean, that's what I see as well. So, well, we're out of time. We can go on for hours. I'm talking this stuff because
that was one of your sellers asking about closing costs on the phone call. I picked it up for you.
Closing costs, they can be tough. I tell you as we go along. Anyway, you can always you can Google Jim Remley and everything will come up for you if you want to get a hold of him. He's a terrific coach and great leader here in our valley as well. And of course, Shanon, get a hold of you. Same thing. You can Google Shanon Pewtress, and she'd love to help you as well as anybody around. For Joe and I, that'll do it for the Real Estate Show for February the 9th. So great to visit with you. We're back next week with another show. In the meantime, have a great weekend, and God bless you all.